Hello, welcome to the Boston Private Income Fund quarterly report for the period ending 30 September 2018. My name is Paul Jones and I'm the Fund Manager of the Boston Private Income Fund. I'd like to start the September 2018 video presentation with our investment report. The Boston Private Income Fund is reporting an official quarterly return of 1.9541% for the September 2018 quarter. This is equivalent to an annualised return of 7.7528%, which once again exceeds our targeted return for the period. Thinktank Group Proprietary Limited, or Thinktank, is a Sydney-based non-bank financial institution commercial mortgage lender and is the manager, originator and servicer to each of the commercial mortgage trusts that form the basis of the Boston Private Income Fund's investment strategy. Boston Managed Investments Limited is pleased to report that Thinktank has again produced another strong performance over the recently completed September 2018 quarter. At the completion of the September 2018 quarter, Thinktank recorded total loans under management of $890.6 million across 1,350 loan accounts. In comparative terms, the value of the loan book has grown since the September 2017 quarter by $249.9 million, an annual growth rate of 38.9%. The quantum of loans under management shifted upwards by 368 loan accounts across those 12 months, which is a 37.5% annual increase. Deeper loan book metrics taken from the Thinktank commercial property loan portfolio at the end of the September 2018 quarter are equally as impressive. The weighted average loan-to-value ratio, or LVR, as measured across the portfolio at the end of the September 2018 quarter is 62.91%, a 114 basis point reduction in the same ratio reported at the September 2017 quarter, and an indication that Thinktank is focused on maintaining prime, bank quality credit as the focus of its lending policy. The downward trending progress in LVR contrasts against the growth in monthly new loan volumes and total loans under management, both of which have increased at the same time this monthly LVR figure has been declining. Lastly, the 12-month rolling average of loan accounts classified as being in arrears has again been maintained within acceptable limits of the preferred 1% band of total loans under management, an impressive metric for a commercial mortgage portfolio. As forecasted previously, Australian official interest rates remained unchanged at 1.5% during the September 2018 quarter. And the consensus opinion among market economists is that the Reserve Bank of Australia, or RBA, will maintain that level into the short to medium term. This now marks 25 months since the RBA last altered the official cash rate on the 2nd of August 2016. The RBA reconfirmed the official cash rate at 1.5% at its October 2018 meeting. This extended stability in the official cash rate has been contrasted by movements in the 30-day bank bill swap rate, which is also referred to by the industry standard term BBSW30. This BBSW30 interest rate measurement retreated late in the September 2018 quarter from a June 2018 high of 2.02% to finish the quarter at 1.87%. Movements in BBSW30 are not as uniform as changes in the official cash rate because swap rates are more sensitive to monetary policy changes both in Australia and overseas. The close of the September 2018 quarter saw the first public release of the interim report into the Royal Commission into Misconduct in the Banking, Superannuation and Financial Services Industries, which you may have heard referred to in the general media as the Royal Commission into Banking. This report did not make any specific recommendations. However, there has been substantial public debate around how future recommendations may be framed and also which industry sectors are most vulnerable. Your investment committee has closely monitored the evolving picture and remains confident that any likely reforms extending from the Royal Commission into banking will strengthen Boston Private Income Fund's position in the non-bank marketplace. Boston Managed Investments will continue to its investment focus on commercial rather than residential lending to help insulate the Boston Private Income Fund from any negative or disruptive effects that may extend from the consumer and residential space. Whilst Boston Managed Investments believes caution and level-headedness is critical in the application of any recommendations that may stem from the Royal Commission into banking, we do believe the outcome will benefit the Australian financial services industry long term. Finally, I would also like to take this opportunity to remind all viewers that the Boston Private Income Fund remains open to new investments, and all existing investors can easily increase their current allocation with very little paperwork required. All referrals are welcome. In fact, this has become our main source of new investments. We host regular presentations at our offices, and of course, existing investors are also always welcome to attend the presentations, either for the purpose of receiving an update on their investments or just learning more about the progress of the Boston Private Income Fund. To arrange an investor presentation date, please contact me using the number that is currently shown on the screen. Please also feel free to contact me on this same number should you have any questions about this statement or any general questions about your investment in the Boston Private Income Fund. Thank you for watching our quarterly video presentation.